New stats are in the books, and 2 of 3 cities have seen the median sales price decrease, and that is news. We're in a shifting market, and the numbers are beginning to reflect that. We'll give you the details. Hi, Jessica here from the Genung team and Active Realty. Welcome if you're new here, and welcome back if you're not. I always really appreciate you stopping by my channel. This is an interesting market report. We're going to dive right into the stats, and then we'll have a little bit of commentary right in between the slides. Every month we review the stats for Temecula, Murrieta, and Menifee. For simplicity, we only analyze single family home stats in these markets. So no land, no condos, no manufactured homes, etc. The big news in my stats is that median sales price decreased in both Menifee and Temecula, but Murrieta saw a price increase, interestingly. Murrieta's median sales price reached $700,000 for the first time in history, which was a 0.7% increase month over month. They increased 13.8% year over year. However, that is increasing at a declining rate. While Murrieta is limping along with a small increase, Menifee, on the other hand, had a 2.9% decrease in median sales price from $595,000 down to $577,000. Year over year, Menifee's sales price has increased 15.5%, which is also down because we've typically been seeing this number over 20%. The Temecula median sales price stats are by far the most volatile. In January, March, and April, Temecula saw big month-over-month price gains. 3.6% increase in January, 4.1% increase in March, and 5.1% increase in April, peaking at a median sales price of $766,000. But Temecula saw price decreases in February with a 2.8% decrease, and again in May with a 0.8% decrease, and our most recent stat in June had a 2.6% decrease. The June decline brought the median sales price from $760,000 to $740,000, which is down $20,000 in just 1 month. You may recall back in February when Temecula saw its first price decline in a long time. I cautioned that 1 month does not make a trend, and sure enough, the next couple of months saw big gains. But now we have 2 more months with price declines, and it's become even more obvious that we are in a shifting market. This market is very sensitive to the interest rate increases that we've seen lately. This past week, the 30-year fixed interest rate actually came down a little bit, and I'm seeing most quotes fall in the 5.25 to 5.75% range. But prepare for more volatility, as the Fed has said that they are going to increase the federal funds rate again by 50 or 75 basis points when they meet again this month. I think 75 basis points has been the expectation, but we've actually had some positive economic news in the past couple of weeks, so we'll see if that impacts the Fed's decision at their next meeting. What positive economic news, you may ask? I'm going to run down that briefly. In May, job openings fell 6.9% to 11.3 million. There are about 2 job openings for every 1 employed person, indicating that the labor market is still strong. Hourly earnings are still increasing, and the unemployment rate remained unchanged at 3.6%, very low. Shipping rates are falling globally, and the supply chain is righting itself. The day this video is set to be published is the day that we get the latest inflation numbers. It's going to be too late for me to mention them here in this video, but I'm going to pin the results at the top of the comments below. In May, if you recall, the inflation number came in at 8.6%, which was the highest reading in 40 years, which prompted the latest 75 basis point rate increase. Real quick, did you know if you hit that like button down below that YouTube is doing this new thing where it makes this picture of digital confetti? You should try it. But seriously, if you're finding this information helpful, we always appreciate it when you let us know by clicking the like button or subscribing to the channel. Let's get back to the stats, and at the end of the video, I'm going to discuss if I think it's still a good time to buy or not. Number of closed sales in Murrieta is up 4.2% month over month, which is basically flat though because it's only up by 8 homes, but it is down 27.3% year over year. Month over month, number of closed sales in Menifee is down 14.3% and way down year over year with a decrease of 30.9%. Temecula closed sales are down 4.8% month over month and way down also year over year, 34%. Days on market is increasing in all 3 cities. Murrieta's days on market in June is 9 days, Menifee's was 10 days on market, and Temecula was also 10 days on market. Month over month and year over year increases in days on market percentage-wise are big, between 25 and 50% longer, but historically homes are still moving very quickly. Instead of selling in the first week on the market, you are more likely to sell in the second week on the market. So we're still in a strong seller market. So how do we know if we are still in a strong seller's market? Let's look briefly at months of inventory. Months of inventory is rising in all 3 cities if we look at May versus June. Starting with Murrieta months of inventory, in May it was 1.3 months, and in June we had 2 months of inventory. Menifee went from 1.5 months in May to in June it had 1.8 months. In Temecula, May had 1.4 months of inventory, and in June it increased to 2.1 months. 5 months is considered a balanced market. So at around 2 months of inventory, we are still in a seller's market. Check out this chart of inventory months supply going back to January of 2019, and you can see that we still have a ways to go till we get to a balanced market. 2019 was definitely a slower moving market, but still under the 5 months of supply we consider balanced. Speaking of supply, we are going to move on to our last stat, which is active listings, which is otherwise known as inventory. How many homes are on the market for sale in each of the 3 cities? Inventory is surging, quite frankly. We're going to start in Murrieta with active listings that are up 35.5% month over month and 51.5% year over year. In Menifee, active listings are up 15.4% month over month and 50.9% year over year. In Temecula, active listings are up 33.8% month over month and are up the exact same 33.8% year over year. This is good news for buyers that have more options now. Last year, the available homes buyers had to choose from was so slim that even if they could find a home that they liked enough to make an offer, they were sure to have lots of other buyers as competition. There is much less buyer competition currently, and we are getting many clients' offers accepted on their first or second attempt. So for those of you that have been waiting for an easier time to buy, this is a much less gut-wrenching time to be a home buyer. What about the risk of catching a falling knife? Will the market be falling over the upcoming months? Nobody can say for certain either way, but if you caught my video last week, I talk about how I do not feel that we're in a housing bubble, and my advice for what it's worth on any investment is to try and not time the market. I have personal experience with bad market timing, thinking that the market was at the top when it was not even close. I sold a personal home in 2018 and an investment property in early 2020, and I wish that I still had those homes. On that note, I wish that I still owned every property that I had ever bought. So when my clients ask me when they're purchasing a new primary residence, should they sell or rent their current home? Although I would love to list their current home if they do choose to sell, my advice is to try to keep it as a rental if you are financially comfortable enough to do so. On a side note, the relationship between homeowners versus renters and net worth is very, very clear. In 2019, homeowners in the US had a median net worth of $255,000, while renters had a net worth of just $6,300. That's a difference of 40 times between the two groups. And that was 2019. Imagine what that gap is right now. Rent prices just hit 13 consecutive months of record highs. There are, of course, some instances and markets where it may make more sense to rent instead of buy, such as maybe you don't plan to live in the area for that long or you can't comfortably afford to purchase. Above all, in my opinion, you need to be able to sleep at night, and if you're going to purchase, you need to be comfortable with that payment. I will tell a very brief story of what the housing market was like when COVID hit in March of 2020. We had about 4 or 5 clients that were in escrow and scheduled to close on homes that month. The shutdown happened and it seemed like the economy was going to be taking a huge hit. All of my clients, they were still within their time frame that they could cancel and walk away, but they did all decide to move forward and close. One got pretty rocky as they were very concerned about the timing of their purchase, but they still decided to move forward. Especially back then, I don't blame them for being nervous because we all were. But those clients now have around $200,000 of equity in those homes, and they are very thankful that they had the courage to purchase when they did, and I'm happy for them. This volatile time may be another buying opportunity, or if we do go through a bumpy time in the market, ideally you want to be in a strong enough financial position to ride out the roller coaster, because there are no guarantees with any investments. But it is pretty much guaranteed if you do not make investments, then you will not be realizing any gains either. Next week, my plan is going to be to complete my Murrieta driving tour series with Central Murrieta, otherwise known as the Triangle or Golden Triangle. I've already done tours of West and East Murrieta, and I got called out by a viewer for promising to do Central and not doing that yet. So we listen to you, it's coming. Feel free to request any other topics of interest that you might want me to make a video about down below, and we'll see you next week. Bye.